Hello, hello. Good morning, good morning. See, we got Luke in the chat. Have Xauusd, Sylvia, welcome. Armin and Jane. Let's get this. Yesterday's daily candle, I actually just saw it right now for the first time. Man, my reaction was like, I wish I caught my reaction on stream, but look at this. This is 2,462 pips. Insane. This is just like so much volume over here. This is so much volume. When was the last time we even saw a candle do that? And we can see that gold right now is on the daily. It's up right now plus 0.80%, but it really feels like just like a big wave that crashed, right? Because even being up right now 0.80%, it doesn't feel like a 0.80% trend. It doesn't feel like it's really trending that much. It just feels like there's a huge volume in the market currently right now, and we're getting these huge swings. So it's easily getting us up towards like 0.90, getting 1%. Because the sell-off is also pretty strong. As you can see, like price is still selling off quite a lot over here. So let's see from the Asia Open. You can see price from the Asia Open have just been more or less kind of creating new higher highs, higher high. So this has been the market structure, correct? So these are our higher highs and higher lows. So overall trend right now is a bullish. We are currently moving towards the upside, but at the same time, we're seeing a lot of like the selling pressure coming in over here. Especially during the... Oh, screen share. Let me try screen share again. Yeah, sometimes on Discord, you got to do it like a couple of times. Should be good now. Yeah, damn, forgot my train of thought. Oh yeah, there was a lot of selling pressure this morning. There was this one sell that I wanted to catch over here, but I couldn't because pretty much because price just shot down. It just shot down pretty fast over there, so I couldn't get it. If I got it, I could actually go ahead and slip, but it would still have been a profitable trade. There was a lot of volume, but it really did push more than I thought it would at the entry confirmation. And then, yeah, I kind of like saw this one over here playing out. This was a nice little buy situation that happened right over here. So with the daily bias being bullish too. Boom, boom. That's just been kind of like distributed to the upside now. You can see it like retested as well this zone right over here. It came back for a small little cheeky retest and then boom, continue to move upwards. Because remember, this is a high volume area in the market. All right, so high volume area, we got price coming back into that high volume area and then to continue to upside over there. But you know, the first move was this on the break right there, and then came back to see if Luke wanted to get in some more buys, and then you know, price continued to move up here again. Right now it's just correcting because it's already paid out these traders right over here. So a nice little 160 pip move. And now it is back into that zone. As I wait for some kind of a confirmation over here for some buys. Maybe get something similar like this happen. This would be nice to get happen like right here. Exactly like something that happened right there. For a little buy situation. So that's what I'll be waiting for. Very clean, very, very clear to see as well. I got faked out on sells, then I held on too long, but I got in on the buy. Yeah, I'm in the sell here. You know, the thing about the sell down over here, I was thinking was like, we've already come to the bottom of the range at that point. You know, that was the only thing. It's like price had moved so much and there were other sells that had already played out all the way up over here. Like there was this one right here too. Little Ricardo style entry, wait for the candlestick to close and then get in on the break of the wick. Over here, price pushed down on the initial break about like 18 pips, then followed through about 30 pips. So this one right here, which is a little bit higher up, there was this bigger one right here, but that would be the first one because the overall market was still moving bullish. And then there was this kind of like cheeky one right over here, but this one kind of moved too fast. And at that point, I was like, man, I think I missed it. I think I missed it because, you know, at least here we would still have some room to keep moving down towards that support as well, like 42 pips. And then that would have been the trade right there. And you see, as soon as we bottomed out, it gets a bit risky. Started consolidating and instead it broke to the upside with a bit of liquidity grab confluence right here. So now we're kind of like in a range. That was your buy? Oh, nice. You got a nice buy as well. Very well done. I was long silver, 70, gave half of my gains. Yeah, silver has been moving mad as well. A high percentage gains on silver. What's up, Jason? Peace. Yes, sir. So I'm just waiting for like a buy. It definitely feels like a different type of kind of like a volume here today. Even if we're up 0.80%. It's just like so much volume, you know. But it's stuck in a range. You have a resistance up over here and you got a support down over here. Range is around a 252 pips. So we're kind of just looking to play this. You know, and I think it would be nice as well if even if it came down a little bit more. Because it would be like looking to basically buy at the bottom of the range and then sell at the top of the range right there. I had two buys, the same one you talked about and the one above. Ah, nice. That was like the most obvious one right there since the pre-London session. Since pre-London was pretty much just sells. I don't think there was no buy. Okay, well, except from this one. This is a buy right here. The majority is just selling pressure that was coming in. Resisted any counter trend today, wondering if I had missed a move, but nope. I got the buy I wanted with some patience. Oh, very good. Yeah, I mean, like that was still with the trend for sure. Right here. And yeah, you resisted these sells. 5-minute candle opened up potential liquidity grab before aggressive move to the top of consolidation. You got the liquidity confluence right there. Zero drawdown, very nice. See, zero drawdown. That liquidity grab, the only thing you would not take that trade obviously is just bottom of the range. It just always gets more risky the more of them you miss. But very nice trade. Dubs. We got caught XAU USD on Asia session. Nice little wick entry that is. Clean range on the left hand side. Nice candlestick colors. Feel like you're changing them like a... Yeah, you probably got like some templates, don't you? Don't you, Rainsy? You got templates for your mood. So you're gonna put like this mood here today, and you got another mood on another day. Very nice. Yeah, gonna wait now and see what we, or rather I can catch over here. Because there's no we in trading. There's only you and yourself. But yeah, let's see what we got here today. Hopefully get like a very nice clean move, something similar like this right here. The nice little break that happened. Beautiful. A very clean break. Straight to take profit, that one. And I think it was a pretty steady break as well. There's a gradual break. You also got that SMA crossover right over here too. You got that 50 cross to 8. No, you got the 8 cross to 50. Beautiful, man. Actually, this could have come in even sooner. Now that I'm looking at it, there's one entry here and there's one entry here. That was also zero drawdown. If you're feeling a bit confident in that. But a interesting situation. I think I would have taken this one too. It's massive consolidation because the daily pull down so heavy. We have so much range to correct as well, like clean traffic to the upside. was like 45.32. 45.32. Let me know if my audio is alright on YouTube chat. Like if my audio is cutting off or anything like that. I changed like a small setting. So if the first part of my voice cuts off or the last part, just let me know. Just got the, what do you call it? The noise gate. Oh, perfectly fine. Alright, awesome. Yeah, so we're looking for price to push here and correct this move potentially. Because you know, overall we're still bullish, right? Overall. Like we just tapped about 45.53. Shy of 4,600. Doesn't really mean much. Down by support by a 43.40. But it's crazy amount of profit taking. You see, this is why I mean, like, it's actually something, you know, Luke called out towards the end of the year, profit taking. But this is something we got to be very cautious about, right? But I hope this is enough of them to for the banks and institutions right over here, because you know the quarterly reports and whatnot, they're gonna take profit towards the end of the year, so they can have that on their yearly earnings. So you know, hopefully this is enough. Don't want to give it all away. I mean, we still got 2026. They still gotta think about the next quarter, you know. So hopefully that was enough. That was enough of a dump. There's just a small release. We got how many more days here till the end of the year? About like one more day actually. No, today and tomorrow. Yeah, I got like today and tomorrow. So I want to see price start moving up here. Hopefully, there's a chance we could range. It's a really like if we go on that, if we see that clean traffic on the 30, it's theoretically like still distributing from this zone. Oh damn! Wait, let's go on the 1 minute. Is there anything? No, there's nothing. Thing about trading the 1 minute is the setups kind of sneak up on you, right? Because it only takes like about 1, 2, 3, and maybe like 3 or 4 candles right now. It could make a setup like 3 or 4 minutes. So we got a 30-minute consolidation break right here. That was quite nice. I think it came in a bit earlier. From here, boom, boom, boom. Break of the high. Oh, that was a tough pullback. It broke the high of this area here and then retested the zone to keep moving up again. But it's kind of trickling to the upside if you notice. Yes, we're moving up, but we're kind of like in this weird little trickle. And the reason is because this range is so big. Whenever a range is really big and obvious, sometimes like price is not going to correct it like that clean, because a lot of people are looking at it, so it kind of trickles through it. But right now we are accumulating over here potentially to get like some kind of candlestick start breaking above with volume outside of this range. Like you got to think about it this way. Whenever the market is arranging, it's getting ready. It's getting ready for something, you know, like, so you just got to identify where that sideways movement is coming in. They're getting ready. So obviously the bigger move would be a break above like 43.83 over there, because then you know you can still keep going up. But man, a complete distribution yesterday. I feel like the market just it didn't even think about faking people out yesterday. It was just all about profit taking. That's all that it was. And this happened during the New York session. Imagine this, like we're literally getting the biggest candlesticks during the holiday season. Like when was the last time you saw a 2000 pip candle on gold? Right, from wick to wick, 2,473. That's insane. Like you don't see that. Typically, you don't see that. Last time we saw it was 21st of October. But you don't see that. That's crazy. 21st of October was even a bigger one. It was about almost 3,000 pips Oh, damn. I wish it pushed to like 3,000 because, you know, the market likes these kind of like numbers over here. It's pretty close to 3,000 pips there on the daily, though. That's crazy, Chad. That's crazy. But the percentage gain on that is maybe like around 2%, 2.5, maybe 3, 2.5, 3%. Something like that. You know, silver god's gonna do like 10% silver. So it does like 4% easy, 10%. But man, for gold, that's a huge move. You could have bought another Bugatti if you held a runner. Yeah, man, you could have like, you know, like whenever you're gonna catch a move like this, it takes a lot of planning. You know, it takes a lot of planning and anticipation, and you know, you kind of lock into those kind of events, basically. Hey, look at this. Look at how insane this market open was. This was on this was what, last week Friday, or was it this week? We're on Tuesday. This is Monday, yesterday. This is what, Friday? Yeah, this was Friday. The Friday market open. Look at this thing just skyrocket up over here. Pushed up around like 400 pips. That's basically a whole daily candlestick average volume in just one 5-minute candle on gold in the market open. But I feel like you gotta like plan those things a bit more, you know, like you have to be a bit you gotta like intuitive, you know, as you think you're approaching towards the end of the year here. You can give yourself like a few chances to catch like really good moves. And most of the time, it will happen during this time though. That New York session time is when you get that follow throughs, the daily follow throughs, because that's when the daily candles are going to be looking to follow through to close. Daily candles don't really think about closing during pre-London or London, but it's more or less towards the end of the day, obviously. So you're going to see it start from the New York and then London session close, kind of like fizzles out over there. So you kind of just have to like plan, you know, sit on your hands, anticipate, and just give yourself like a few tries over there. Yeah. So it's just the same thing as waiting for like an FOMC event, for example. Since, you know, the probabilities of rate cuts were so high up, you could just like sit on your hands, you know, like plan, scheme, and wait, because you've seen it happen over and over again, right? Because over the years you build experience, correct? So let's say, for example, COVID happens again, and then we got a situation where we need vaccines for a new disease or virus, whatever you call it. The thing is, like, since of your experience of COVID, you know eventually there's going to be a vaccine, right? So you kind of like just sitting on your hands, you know, again, you're just waiting for that notification to pop up, and then you put yourself in that position. But it takes like a different kind of mental model, you know, because at the same time, I think you could day trade like as casually, but that definitely requires some kind of locking in, you know, and you want to risk maybe like, you know, 5%, like a good amount of money over there. Just why I'm leaning towards like a more smart money kind of, in quotations, trading, because now you're just kind of like relying on the fundamental work. But you know, throughout a whole year, you're gonna get certain events like that. Like for example, the numbers that are coming out in the new year for man, I always forget this. This is consumer spending. Consumer spending numbers for the pound should be coming out like for the first month. Oh, the month of January should be low because people spend money on Christmas, you know. But how volatile that's gonna be is also like another question. But it's something you can expect because people spend money on Christmas. No one's spending that much money at the beginning of the year, so the numbers are gonna be coming out lower. Just little things like this, you know. Still risking more than 2% is dumb. Yeah, I mean, like that, if you're gonna take like a few trades in a whole month or even like in a whole quarter, I don't mind even risking like 5% on a good trade, you know, because at that point I'm just like making up for all the time that I'm not even trading. Of course, risking 1 to 2% is the industry standard, but like how many people can afford to do that? Well, people are gonna risk like 5%. I think 5% max, you know, if anything, but you want to have that as short-term goals. You know, short-term goals, it's okay. It will get you where you need to be, but you don't want to do it for too long, correct? My friend risking 10 to 15%. Yeah, that's crazy because you can take like 5 losses, that's half of your account. Even 4 losses probably. That's why 5 losses gives you Let me see. 25? No. 5 losses gives you 20 trades. Well, like 20 trades in a perfect world before you blow the account. So 20 trades. So what's the probability you're going to lose 20 trades in a row? Man, look at this. Price is just coming down. Jeez, and we're still up here. 0.70%. Maybe we can get another setup. You see, it's coming back down to retest this previous area over here. We're going to get like a situation where we get another breakout. At the bottom of the range. We also got like this little head and shoulder situation here. Left shoulder, head, right shoulder. Price coming in, volumes coming in. And this is too much volume, chat. Like, this is crazy. I bet you beginning of the year, the volume is going to die out. You know, like people are going to be like, oh, December low volume because of holidays. And then when they're back on the chart, it's just going to be actual low volume. Because it's moved so much. But anyway, let's see. That yearly candlestick is coming to a close. I'm risking 0.5% only. Oh, nice. Man, I remember one time I couldn't risk more than 0.5%. You know, 0.5%. It was crazy. My risk tolerance was so low because of just learning, you know. When you're learning, you're kind of expecting to lose. So the risk tolerance was so low. But every now and then I would try, like, you know, make a little more money, but then I would lose again, and then that would just put me back on track. Because I'm always someone who's gonna like learn quick, you know. Like, for example, if I ever see like some cluster of losing trades, I always want to learn from them as fast as possible. Right? So usually what would happen is I would get bored of losing less, and I would want to make more, and I would maybe win a trade, but then I would end up losing again, maybe once or twice, and then quickly putting me back to being sober. But you see, like for some people, they don't have that switch, so they just keep going until their account blows. But you got to remember, like, your first account is meant to survive. Like, that's all that it's supposed to do. It's just supposed to prove to yourself you can actually hold on to the money, right? Because when you come into this industry, it's like you're in a windy, it's like you're walking in the North Pole in that storm. You know how crazy North Pole gets? Literally can't see anything, and it's just so windy, and you're holding on to money, right? So the whole idea here is to hold on to that money. Don't let it get blown in the wind. Basically, try and hold on to as much of it as possible, because that's just going to prove to you that at least you can get to a safe zone with something. You know, some people, they don't get to the safe zone because everything just gets blown away. They take the risky routes. You know, in life, you're always going to have a decision, especially in trading. You're going to either take the safe route or you're going to take the risky route, correct? So if you ever play these decision-based games, when you're running towards something or from something, it always gives you an option in the game, right? Are you going to take the safe route? You know, take the safe route, it's slower. You lose a little bit of time, but what you got to do is going to be not as hard as what you got to do for the risky route. Now, some people like the risky route. You know, maybe they feel a little bit more confident. So what happens is with your account, you keep taking that risky option and you keep messing up the code. You know, you can mess, and the problem is you mess up the code, it also takes your time. So you've taken time and a lot more time as well, and you've costed more money, but then you keep doing the risky route. You know, at some point, like even usually, like what would happen for a gamer that would take a risky route, try it out, if it doesn't work out, you've already messed up once, so it's better for you for that section of the game, just stick with the safe route. You know, if you're already kind of messing up the risky route, because if you mess the risky route up twice, it will kind of change the way that's going to play out. So you'd rather just stick with the safe and try and do it 100%. So that's kind of how I looked at trading in terms of, like, you know, gamifying also the process. Is like, I'll try it, but man, if I fail it, it means I'm not ready for it. Because trust me, like when you're ready, you're ready. You're going to do the risky route and it just works. But yeah, gotta be safe. Man, that's an accomplishment on its own to actually keep your money. Imagine, like, don't fall victim to social media. Trust me, just keeping your money, keeping your risk low, losing less, that's an accomplishment above 90% of people. You know, what does the top step say? Only about 3% of people actually get payouts. Some crazy absurd number like that. But you're going to see on social media so many certificates, so many phases being passed. Only about like 3% of people actually like get the payouts. Also, like if you look at something like meme coins, I think the percentage of people who actually make money of meme coins is like 0.5%. It's even less than 1%. But on meme coins, you go on YouTube, you guys see all these videos on YouTube about how to get rich off meme coins. But come on, man, it's like less than 1%. Funded programs is like 3%. Because as a lot of these people just don't have the education. A lot of people in trading, and over the years I've come to realize they just take the they take a fast route all the time, the risky route. Because it takes time, you know, it's like a business, right? If you go into it with a mental model of losing less, then you're gonna succeed. Because you just gotta survive the learning phase, learning curve, without getting discouraged. Once you survive the learning curve, awesome. Hey, we got Ricardo in the chat. Morning. Yep, here for the risky stuff. Raise his hand. Let's go. I saw a kid blew a 6 funded account. Oh, a what? A 6 funded account. Man, I was watching this video of a guy yesterday talking about how he blew around 140 funded accounts. I'm like, damn, maybe I should open up a funded account. This guy's making a lot of money over there. That's a reason still learning about SMC and ICT strategies. The double top 15. Funded is fun. Yeah, funded is fun. I get the idea behind it. I get the idea. You know, back in like 2020, it was different. It was a little bit different. Right now, there's a lot more hype towards funded accounts. When I was doing it, there was not that much hype. I would actually argue and say people were more disciplined when I was doing like funded programs. You know, people were more disciplined. They took it like a little bit more serious. Nowadays, it's kind of like, it feels kind of more gambly-ish, and there's so many of them and so many people making videos about them. It feels kind of different. They lie to you. It says like they're trying to make you more disciplined with these consistency rules and all of that stuff, but nah. It's completely different now. Man, people I felt like in 2020 actually gave a little bit more of a shit, you know, about their education. The problem is right now we have too many Alex Gs. We got too many Alex Gs and that type of those type of influences. Man, back in that time, like even think about Mamba FX, dude. Mamba FX used to be in his humble abode with his children. Nothing fancy. Nothing fancy. He never saw anything fancy. Literally, he used to make videos in his child's bedroom or something like that. And oh, holy! And it was more education oriented. Nowadays, like everything is more bubblegum type of style, you know? Oh my days, holy! Look at this. I told you, like, some feels different. It says it's daily bias bullish, but this is not. This is just a lot of volume. This is just a lot of volume, you know? We're still seeing profit taking happening here. Damn, Daniel. You know, the thing is, I want to see, at least before looking for any sells, a lot more of a push. Hey, what's up, Joshua? Good morning. Profum's getting rich? Oh, yes. Yeah, but you know, they give like a really nice opportunity over there. It's a lot of fun, you know. It's a lot of fun if you can get to the payout. Got the sells posted on Discord, but missed a nice runner. Yeah, man. Like when I was starting, like a lot of us, like when we started trading, like even people like Roger Banks. Man, I used to watch Roger Banks make videos in his child's bedroom. You could see like the child posters and everything. Like people gave more. They actually cared a little bit more about the education. But you see, nowadays it's different. Like you have to cater to what the people want, and the people sometimes, unfortunately, don't really want the education. They want something else. Oh, but let's see. Gbpjpy. This is a nice little clean over here. Clean sell. Clean traffic. Towards like 43.64. Nice little SMAs. In and out. Very nice. What is this on like on the this on 1 minute? But why take a trade over here? I still don't really get why take this trade. Because like price was coming down like this. Why take the trade, sir? I played out beautifully. You're on the right side of the market. It looks like somebody else caught the buys. So I sell below the range, liquidity. Entry at the break of the range, I sell at break even. Yeah, that's what I meant. Like there was another entry that came in sooner. Looks like he took it. He took the one that came in sooner. Then there was the one that came in later. TP more than a 1-to-1, 70 pips. Yeah, we got a pretty big stop over there too. It's huge. Really big stop. I think, let's see, how much was that? From here to here? Yeah, that's like 70 pips. Yeah, he said a 1-to-1, 70 pips. You don't need 70 pips. Like 20 or 16 pips will do. Especially now you got like SMA confluence here. So you got the SMA still kind of holding as a dynamic support. Usually if price comes even like 20 pips opposite direction, it's most likely just not the move. But yeah, pretty good. See, like this, pretty nice straight of profit. Like essentially what we're looking for is just zero drawdown, like clean trade. So we don't need such a big stop loss. But if you feel safer with it, like, you know, by all means, it gives you more room to manage your risk. I'll admit that. Definitely gives you more room. So if it goes against you, then you're gonna lose a lot less. If it goes into profit, you can still make more because it shouldn't retest your entry. So even if it goes like 16-20 pips and you got stops to break even, like it still shouldn't retest the entry. So you could still make what you need to make. Especially if you're chasing pips. If you're doing a funded program and you're just chasing pips, then you could get away with like lowering your risk with having a bigger stop, because what's the probability candlesticks are just gonna come straight down like this? It's less probability. You're most likely going to get a bit of structure first and then manage your risk and then lose less. And if it goes in your favor, you can still get the amount of pips that you need. But I guess you go like 100 full risk on that, full port. You basically like full port it. You full port it, and then your idea is not to get stop loss hit. It's to manage, maybe like 50% you can cut it off, or like even more than 50%. It's like 70 pips. You can probably risk manage like 70-80%, even though you're full porting. But the good side is if it goes in your direction, it's a full port trade, right? 5-minute candle opened up, potential liquidity grab before aggressive move to the top of consolidation, entry break of the high. Yeah, a lot of people got these buys here. Dubs in the chat. Yeah, I kind of missed on some trades this morning. Caught the knife now, having fun. $100 account doubling. I don't want to stress. I start trading normal next year. Oh, all right. Fair enough. Yeah, we still got Wednesday, Thursday. That's gonna be New Year's. We'll see how the market is. He's starting new 10K funded by FTMO. Godspeed. You're waiting for January. Yeah, people waiting for January over here. I got tired of waiting. I don't like waiting. Like, honestly, man, it just feels like a waste. It's a waste of time. Market's been moving so crazy as well. I think if you're taking a break, it's just more of a personal reasons, you know? It's because, like, it's all psychological. It's nothing... Christmas and all these events and stuff, we just kind of made it up, right? We're literally just living on a ball, a rock, which is flying through space at incredible speeds that we don't even realize. It's even a miracle, right? But we're just kind of making all this stuff up. So for me, the way I look at it is, if markets are moving and you can trade the markets, you can trade the markets. At the end of the day, you get to decide like what you want to do. If you want to have a holiday, you can have a holiday. If you want to trade, you can trade. As long as you have the opportunity to do it. It's just the same way as going to the gym. You know, it's like, if you can go to the gym during holidays, but a lot of people feel like they're going to take maybe a week or two off and then hit it again properly in January. But you can choose to just go and just get it done anyway. But yeah, we've been kind of lazy. I got lazy too. I haven't hit the gym in like 2 weeks. So it does get to you. So it's something, you know, you also got to think about. You know, that kind of influence. If you're getting like outside influence, sometimes we get outside influence, we don't even know it until later on. Damn, 2 weeks. Yeah, I'm not like these guys who gotta go. Like I got my neighbor. My neighbor's so ripped, man. He's been gymming for about 10 years. 10 years. This guy gyms every day. I asked him like, how'd you gym? Like, he gyms every day. Every like about six times a week. 6 times a week. He does leg day like only once in the week. And everything else is just, you know, upper body, I guess. But he's ripped. He's ripped. But, you know, he's got that psychology on lock. Because for him, it's become normal. It's a habit. It's like he can't go a day without doing it. Which I find like, I always envy those kind of people. Because you always got to take care of your health, you know. The health usually comes first before anything else. Because if you get sick today, money is not going to save you. You know, money can only help you so much. It can make your life easier. But no amount of money is going to make you live longer or feel any more healthy. Or even make you happy. Sometimes money doesn't really make you happy, but it definitely helps. Yesterday did $100 to $230 today, a bit far because it didn't hold this knife. Man, the thing is, right now the daily's bullish. I would love to get into a sell because I see the sells are playing out a lot easier. See the buys here still played out, but they still kind of struggled a bit. But if you get into a sell confirmation, look at just the way it bleeds. I'm contemplating whether to even take a buy. Because it says bullish, but there's a lot of freaking selling pressure. Let's see. We got a support down over here. We even broke the support level. We're trading below the support level, but this could be a reversal confirmation entry. So if you go on the 5 minute, so this is that support we're holding. It could be like a V-shaped reversal back to the upside towards like 43.71. We could take it like a reversal play, but like price needs to come down first. Here, like that support, then break above. But this is a type of trade that if it's going to be a wrong trade, we're going to know it's going to be a wrong trade pretty fast. Because there's a lot of, there's still a lot of selling pressure in there. That's the upside. You're going to know if it's a winning trade or losing trade quite fast. That's a good part about being a trader. You choose when to take off. Exactly. You gotta be like your own boss. Gotta choose when to take off. Austin, here you go. Oh, Mr. Rashid. Enjoying too much. Enjoying too much. Is it gym rat? Yes. Yeah, it's gym rat. But you see, it's a good consequence to having a habit like that, because you know, like the results you get is just a consequence of the things that you do on a daily basis. So this guy's consequence of what he does is he's got muscles. He's got muscles. You know, it's a good consequence. It's just the same thing. If you got a bad habit, you're gonna get the same consequence, whatever that habit is. So it's always about building yourself like some kind of a good habit. A habit. Yeah, you get a good habit. You always gotta look at your life, because you know every day we all get the same 24 hours, right? So in this 24 hours, how much of that is actually filled with good habits that can give you results? You know, so think about like something like gym, right? The consequence is muscles. Amazing. You got that in your 24 hours, for example, right? Like what else are you doing in your 24 hours compounded over a period of like a year or 10 years can give you like a really good result to look forward to? It's on 24 hours. We don't have a lot of time. You know, this is not much time. So from the moment you wake up, like you gotta really audit what you do or get done on a daily basis. So since we're like all traders over here, that's one important thing. It's like it's at least a skill that can be built on, right? A skill that can give you money. So out of your day, you're gonna take like 2 hours, maybe out of your day, to look at the charts, to study the charts. Amazing. You got like one good habit over there, at least one good habit. It would help if you could lock in more hours than this, obviously, but at least it's something. You know, it's like some things out of your day, they're gonna require, they can require more time. So for example, gym, you can't gym all day. You want to gym maybe like about an hour. That's, you know, cap it at an hour. There's no additional benefit beyond that point, correct? So with trading and learning, 2 hours is a good start, but you can definitely like keep going, and there's an additional benefit to putting in more hours. But at least it's like two really good habits to build on. Reading books, learning some new skills. Yes, sir. Read some books. You're gonna be like Tai Lopez. You're gonna have a whole library of books over there. Man, Tai Lopez said the wildest things. Just say you used to read a book a day. This is crazy. How can you read a book a day? He later debunked it and said, oh, well, I don't actually read it from like page to page. I kind of like skim through it. Or like those guys who world record holders in reading books. There's a guy who just goes through all the pages and he mumbles like, blah, 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 and it says, and he closes the book and he says he read the book. I don't know if you guys have actually seen that meme before. Well, that Chinese kid who puts the knowledge from the book, he does this on the book and then he puts it over his head like this. Yeah, here it is. Like this. This is how some people, they're gonna consume books. This is the fastest way to read a book. Just gotta take all that information from the universe. I think like reading is really good, but what's better than reading is practical. 100% practical. Reading, you can read about so much from people with experience. But you can never walk in their shoes, like really walk in their shoes. But these are people who have been through a lot and they're going to share with you so much information. But when you're actually going to do it yourself, in practice, best way to learn. I'm looking for a buy, but I'm still waiting on this thing to kind of set up a little bit more. Definitely don't think it's clean enough yet. I'm reading a book named Eat the Frog by Brain Tracy. You can share if there's any kind of psychological value that can help people. You know, we got a section here, psychology, where you can, you can share your books. I was more like this kid when I was reading a lot of trading books. And the way I was doing this, my version of it was just audiobooks. So I just listen to audiobooks when I'm sleeping, when I'm working. So that's just how that I saw was the most efficient way. But the problem with studying as well is I think research says when you go to a class, and it's always the reason I don't get why lectures in university are so long, because people don't take as much information as efficiently anymore at some point. You know, through a whole class, the only thing you're gonna remember like very small bits and pieces of the class. You can't remember a whole freaking 3-hour lecture. Kind of doze off. Actually, you know, in business, man, you got 5 minutes to capture the client's attention. So whenever you go to a presentation, you can't go there with a Word document. Man, you got 5 minutes. You got to explain to this guy why you're going to make him money or what you're going to improve for him in 5 minutes. Because after 5 minutes, they lose interest. So you need like visual learning. You need PowerPoints, presentation like that. After 5 minutes, they're gone. Man, on YouTube, it's even less, man. I think on YouTube, it's like after 5 seconds. We're going to watch something for like even less than 5 seconds. And we're going to immediately know if we want to watch it or not. So attention spans are pretty low. But that's why I also got apps, you know, like even apps like Pomodoro. Pomodoro saw that and then they found like a way to keep people more efficient. You know, there's still like a problem with that. And then it's like a studying tool which kind of helps you stay a little bit more focused. Oh, what's this? I want to practice being a surgeon. Any volunteers? Oh yeah, you seen that picture of that guy, that surgeon who did what did he do? Like a whole, is it like a day? He had like a whole surgery, like a heart surgery that he did for. Oh wait, guys, I gotta lock in here. Wait, is this gonna be the buy? I think this is gonna be the buy. Right here, as price breaks above these highs. Yeah, we just got the liquidity grab too. I'm gonna get stuck in if we break these highs. Wait, boom. Or should I wait? Should I wait maybe a bit? Yeah, I'll wait a bit before getting stuck in. Let me see if I can get some resistance before, because it could grab this high and then pull down first. But that 5 minute looks good. That 5 minute grab here below like 43.56 looks good. But I don't want to get in because you also got that 5 minute SMA. Oh, wait, we just got the SMA there close. I would wait for this candle or some candle here to first close bearish before getting stuck in any position. I still think it could look a little bit cleaner than this. Even though we got that liquidity grab, it's also showing a small volume decrease. It's just closed like a doji candlestick, and it has SMA to get through right there. It's got that 5 minute SMA. So I just wait for something maybe like this. Just get like candles to close bearish at least. About 16 seconds. No, it's good. Okay, let's see if it actually breaks. I don't want to get in yet though. You see something close first. Oh man, it's gonna break. It's already breaking here. Let's see a candlestick. Oh man, come on now. Why do you see a candlestick first close bearish right here? It's a pretty good area for a trade. Oh man, it's gonna distribute. Yeah, it looks like it's just gonna distribute. It's already gone. Could have looked a bit cleaner. Yeah, see the picture of the surgeon over here. Dude did about a 23-hour-long heart surgery. You know? 23 hours. Look at her. She's already done right there. 23 hours long. That's what you see. That's the reason we can't all be driving Bugattis and Ferraris. We need people who can actually also contribute to society in different ways. We need people to build roads. We need people to do, you know, heart surgeries and all of these other things. We can't all just be all chasing the same thing. You know, but this is insane. Dr. Zbigniew Religa, keeping watch on vital signs of a patient. His assistant fell asleep in the corner. Can't just be having OnlyFans models. Even outlived the doctor. That's why he spent... Wow, this guy outlived the doctor? That's why he spent 13 years in med school. Yeah, I got a buddy who did med school, and man, like med school is no joke. It literally feels like you're doing that from the beginning, you know, like from high school, you kind of already know that you want to become like a doctor, because you have to already start planning your grades and everything at such an early stage, and then you finish it so late. And you have to pay back those student loans, and man. But you see, that's why school is good. School is good for people who know what they want to do like that, who can get locked in a lot sooner. It's a nice little 30 pip move right there. I feel like I wish it was a little bit cleaner. Like this could have definitely looked a little bit cleaner. Well, there was definitely a setup coming in here at the breaks of the highs by 43.60. Hey, I'm on a sell. I'm on sell on your entry. Oh, okay. That's not good. That's not good. Now you got price move up. Took it and stops to BE now. The idea was this reversal, you know, like that's why it looked good on the higher time frames. Is there was a reversal play that was happening right over here, and I guess a smoking gun was this liquidity grab that happened below here. So that's why for me that was looking really nice. I just wish we got that 1 minute candle. All we needed was like 1 minute candle to close bearish. That's all that I wanted. This 1 minute candle here close bearish, because this was already forming like some kind of a reversal confirmation. It was actually looking more of like a head and shoulders to the downside. If anything, that would have been better for a buy if that was an inverted scale. Wait. Yeah, we needed like one more support to be formed right here. It would have been perfect. One more resistance. Because that would look good. That would actually look good for a sell. Because as for a sell, then that would have been the fakie right above here. And then to break these lows. To come down. But you see, it would have been given like that head and shoulders. This thing is gone. It's gone to fill up the range. It'll come down like this, but you see it then come down and create a support. As that liquidity grab, and instead it broke the highs. See how it came in with volume? That's an entry confirmation right there. So it's still gonna distribute. Still has like clean traffic to fill up. Or if he up towards like 43, 43.72. Trying to get an internship in a hedge fund. That'd be cool. At least you know something. You can tell them, hey guys, I'm here. I want to learn your systems. I'm a trader myself. I want to figure out how can I increase my trading skills as a retail trader. What should I focus on? That'll be a W internship. Problem is, do they even allow people to come in like that as interns? Very difficult. Very difficult. It's very sensitive, you know? It's a very sensitive area over there. Like with information and the amount of money that's been dealt with. You could be a spy. You could be a spy. You're just gonna go in that building and start putting flash disks inside computers. Dang, sorry you missed that. I'll be to 59. These are the worst type of trades. Like when it's literally just one last thing to confirm it, and then it doesn't confirm it, then it just goes. Because that's how one of the London Open moves. You see, since the London opened, we haven't had any structure over here. Like price has just been swinging. This is the only part that we actually had a bit of structure that would create a point A where price could actually move from. So the fact that we missed that one could mean that that was a first play for the London. Now we gotta wait for the second one. Some hedge funds do because of my dad's friends. It gets easier to get in. Oh yeah, I mean if you got connections, 100%. How about networking, I guess? Walk into the hedge fund like I want a small education of $1 million. Run, Goldie, Goldie, Goldie. Really nice trade. I had order flow confluence while I was greedy on the entry and missed it adjusting SL. Let's read some news. Get the papers out. Gold prices stabilized after retreat. Gold prices stabilized after retreating. Monday prices remain near historic highs with futures in New York trading up 1%. At 43.85 a troy ounce. The precious metal has been on a tear in 2025 with futures fell around 3% on Monday. The fall came after exchange operator SME Group increased margin requirements, which required metal traders to put down more cash on their bets. Oh, this is the reason why price came down. Okay, so it came after exchange operator SME Group increased margin requirements. which required metals traders to put down more cash on their bets. So they liquidated so they could come back in. That's why the price came down. That's crazy though. Like increase margin, man. You know, I know a guy who was getting margin call, and he went to the bank like 3 times in a day. Went to the bank to you know, get some money and put it into his account because he was close to getting margin, so he had to keep putting money in. Man, that's like something that you don't want to ever get yourself in a situation like that. You know, when you marry a trade and you gotta deposit into the broker. Just keep the position alive. I want to thank you for not banning me and hope you all had a blast on a positive year. Why would I ban you? Yeah, but 100%, man. Welcome. But we don't ban people on this channel. Actually, in the beginning, I used to ban a lot of people, but I removed all those bans because it just didn't make any sense. Because you know, on the internet, you always gotta have people with opinions on the internet. You know, you can't ban everybody. So just stop banning people. Unless you're a serious degenerate who doesn't know how to follow instructions, then you get banned. Right? But we don't ban people.
We don't do that here.
Let's wait and see. 5 minute. How's the hourly doing? We just got a new hourly open. Alright, so we at least got a new hourly open. So we got fresh volume coming out of this new hourly. Got a whole wick over here to fill too. It's like 140 pips. 140 pip wick fill. Trading below that 8 SMA as well there. Look at that. But we're gonna wait and see if I can get a buy continuation with this fresh volume here. That means that the market needs to set something interesting here that I can look to get a re-entry for price to keep filling this range. It's about like 50 pips. I think I'll wait for a candle to close bearish. Like I was waiting for one here. But it's still pushing because we just got the H1 open. Higher time frame volume. And we also got a small kiss of death situation right here. Gold rises. Prices may remain volatile. Gold rises in early Asian trade. In the near term, precious metals could see more volatile price action, with whipsaw moves likely to be driven by positioning and thin liquidity rather than a fundamental narrative. Positioning, yep. Thin liquidity, I don't know, thin liquidity. There is some scope for additional consolidation or profit taking before seeing a clearer direction in January. Yeah, that's true. Some consolidation or profit taking before seeing a clearer direction in January. Which is crazy because a lot of people would actually start trading in the new year. And they would start trading with their hopes of passing funded accounts. But they could have been passing it like literally right now. Usually when you get like these many pushes and these intentional kind of like swings, it's kind of the market environment you're looking for. So what's going to happen? They're going to kind of trap themselves now into having waited till the new year to start when we start seeing that consolidation start to come in. And those are just things that we kind of notice after a while of trading, that a lot of people in the beginning will say things like Mondays are risky to trade, Fridays are not as good to trade, or red folder days are not as good to trade. But those are typically the days that you would want to be at least on the charts to see for yourself. It took me like close to little over half a year to stop talking myself out of trading days, because we're really easy of talking ourselves out of not only trades but also trading days. And this is still moving up here like about 80 pips. Damn it, Goldie. Also, that distribution would have been nice right here, but you see it like pushed above and then kind of like ruined the structure for me. So it looks like it's gone without me, Chad. Like that was the move. I had a feeling that was going to be the move. That was going to be since the London opened here. And it's doing exactly what we wanted it to, which is fill up this range. See, it's coming up towards resistance here like a magnet by 43.71. If you're new to the channel, man, you gotta watch the simulation that we did on our YouTube, and then you're gonna know exactly why we look at these ranges. They're like magnets. That was like the smoking gun right here. Guess the only thing would have been just to avoid the structure in the 1 minute and just put our hopes in that liquidity grab would have played out. But still, it even closed like a doji. That was like a low volume closure below that 8 SMA. So at the time, it was a bit risky, at least for me. Without a bit more structure, we're right underneath that 8 SMA. That thing could have like spiked above and then pulled back down, following this bearish momentum. Yeah, now it's at the top of the range. That's it. That's a move. So now we gotta wait for this thing to recalibrate. Hopefully it comes down. What I'd like to see next is some kind of a retracement, and then price to go up again. If my buy and sell buttons aren't gray, it's a good day to trade. Amen. Who is the best hedge fund manager? For me, Soros. And Jim Simmons. Yeah, George Soros. Georgi is a Hungarian-American investor and philanthropist. As May of 2025, he has a net worth of 7.2 billion, having donated more than 32 billion to an open society foundations, probably like for tax purposes, of which 15 billion has already been distributed. Oh, representing, that's nice, representing 64% of his original fortune. And Elon Musk is worth 700 billion. Should be now. 744 billion. Billionaire swag. Where's the black t-shirt, Elon? I mean, I've got catch this guy in a suit or really just plain clothes. Now, billionaires and millionaires, they drive Honda Civics. They don't drive Lamborghinis. And Lamborghini is actually... I don't like the Urus. The Urus is very plasticky. $300,000 car, man. Feels like you're sitting in plastic. But it looks cool. It's pretty fast. And Goldie, where are you running to? I can't believe it. It's actually still distributing from this section right here. It hasn't yet had any pullbacks. It's back up to the highs of 0.92%. $43.78. Is that your target? 43. Yeah, I mean, at this point, we might as well just move up towards like 43.81 there. Because now we're breaking above resistance. We got this next resistance. We might have a reaction of 43.78. It's in the middle of the range. And there's no pullbacks. There's still got 1, 2, 3, 4, 5, 6, 7 candles in a row. Look at this thing just blasting through this level here. Got about 2 minutes 30. For candlestick to close. Higher time frames is not as clean though. Oh, you also got the SMA there. 43.78 on the 30. In the middle of the range. Secured about 80 pips on this. Yeah, I mean, it's done. This is like fully done over here. Whatever else that's beyond this point is going to be like extra. So even if you're planning on leaving a runner, then the next target would be up here. But this is all that we knew that price is going to do. Going to fake below this area. Give us that real reversal confirmation play. Missed it by one candle. Just one more candle. And then just to fill up the range towards resistance. And that was the idea. And played out really nice too. Sometimes the market can be cheeky like that. That's what I've realized. Like sometimes you're gonna have these really good moves, but it can invalidate it by like such a small thing. Just to the way I think about it, it's like it kind of wants not as many people to be inside of it, inside of that move. So that's the only thing that because I've seen this happen so many times. Like whenever it's like just that one last confirmation, it might not give it, but it knows it's gonna have a really nice move. Because for me, the market moves. The way I see the markets and candles, they move by themselves. Like in terms of, it's just the market. You can have people facilitate the moves and the pushes, but you know when the market wants to move somewhere, it becomes like a magnet. Like nothing stands in the way of wherever the market is gonna be going to. If it's gonna come up towards like 43.81, man, you could have Elon Musk right now put like $50 million trade, and he'll move the market. But eventually the market will come up towards like 43.82. That's why I think it's really good, because you know at the end of the day people like blaming the market for a lot of things, but you know the market's always right. Like when it wants to go somewhere, then that's where it just wanted to go. If the 4-hour flip bullish, then it will fly till 90. Four-hour is bullish. And what do you mean 90? Like 43.90? Yeah, like on my broker, 4-hour is bullish. It already did that small liquidity grab here, but it had a test of that SMA. It already tested like SMA here on the 4-hour, but it's coming back towards that general direction. Bill Ackman is goated. I think I've seen this guy somewhere before. Billionaire investor Bill Ackman. Born in what 1966, an American billionaire hedge fund manager who is the founder and chief executive of Pershing Square Capital. Let's see what he says. Bill Ackman quotes, "If I believe that I am right, I will take it to the end of the earth until I am proven right." I'm getting some Jeff Bezos vibes over here. Jeff Bezos also says some pretty crazy stuff like, what did Jeff Bezos say? Customers don't know what they want. I know what they want. I'm not emotional about investments. Investing is something where you have to be purely rational and not let emotion affect your decision making. Just the facts. I'm an extremely persistent person. But you gotta have to be in this game. Can't be crying on the internet about how difficult your funding programs are. Imagine if Bill Ackman had a YouTube channel where he was crying about how difficult things are. I know, I've seen a rise in videos like this on Instagram and YouTube. It's like, this is what you signed up for. Experience is making mistakes and learning from them. 100%. You see, I always say, man, like you gotta fall in love with finding solutions, right? You gotta make a mistake and you gotta learn from it as fast as you possibly can, because it's gonna happen again. Experience is see, price is still distributing right now. It's trying to fill up the second range. The market's being a bit greedy here. It's not giving me any structure. It's just moving. It's just filling up the ranges. A small little shotgun play that just played out here too. Candlestick close above resistance. But it's not giving any structure. It's just moving parabolically. Invest heavily in your best stocks. Be confident even when you're wrong. See, it's important to establish an investment process that allows you to be confident even when you end up being wrong. With confidence and good and a good process, you can make hard decisions. Let's lock into these words of wisdom. You can make hard decisions such as investing more when a stock declines and investing world questions your judgment. Yeah, I think that's very true. Be confident even when you're wrong. Like, but it shouldn't be like completely detrimental, but definitely. Because the reason I'm saying this is because it's so paradoxical, the market, right? Like even the chat, like when I say something, the chat, maybe I'm going to say I want to take a buy, but you want to take a sell. Neither of us is right, but you know, you have to have some kind of like a conviction in yourself. You know, because everything in the economy world and everything is like very paradoxical. Ackman has made some great investments over the years, including in once bankrupt mall owner General Growth Properties. See, don't get emotional about investments. Understand that markets can do anything in the short term. See what the other side is saying. It's true. Always gotta like know your enemy. Don't invest for an ego boost. I mean, like people invest in a lot of like trending things. They don't do any due diligence for themselves, but they get into the whole hype. You know. See, oh, look at this. Many people invest in order to be part of a community, looking for ego rewards of participating in a group. It's also, let's see, but Ackman warns against this kind of emotional decision making. 100%. You got to steer away from the crowd. You know, the crowd wants you to be, most of the time, it's, you can learn from a crowd, but you kind of want to be that lone wolf. Like who's willing to do their own due diligence. As an investor and just stay optimistic. Oh, this way I kind of disagree with him. Stay optimistic. I would say stay cynical. As an investor and just generally in life, it's important to stay optimistic. I've seen very few people in the world accomplish anything unless they were optimistic. Yeah, it's good to be optimistic. I think what drives me is being more cynical. Always thinking that someone's trying to take my money or somebody's out to get me somehow. You know what I mean? Because the way our society is set up from the beginning, it's set up to fail. Right? Like it's set up, if you're not born in a rich family, you're kind of like set up to fail. If you're born in a middle class family, you know it's okay, but with the rise of prices and just a general way that we raise people and in our society, it's almost like you're set up for failure. So you just gotta be very, very cynical about a lot of things. Like the average American household in the world's richest country doesn't even have an emergency fund of like $500 on average. Just looking at silver, it gave a bearish candle prior to entry. You was looking at on gold, do they always move together? Yeah, I think this year they kind of been moving together. Like silver has been up more like 124%, gold has been up about 70%. So precious metals this year actually performed quite well, but in terms of correlation, I don't think there's much of a correlation besides them just being precious metals. But yeah, I mean, like silver's performed quite well this year. Look at this thing. Oh, we also got a big dump on silver. Look at that. Maybe it's the same market participants. You know, obviously, metal traders. Look at this. We got a major profit taking happen yesterday from wick to wick. That's about a 16%. But look at that. It's just basically the same scenario that happened on gold. Because you got to imagine people who got like diversified portfolios. These are all the same kind of people, right? Because with experience, you want to invest in precious metals, stuff like silver, stuff like gold. So you can see that psychology coming in. You can see those patterns. And that's why it seems like correlation for you as well, right? But I think like most strictly speaking, when it comes to gold, people like rather follow the dollar. Even stuff like silver. I think also silver might be affected by the dollar too. I'm not exactly sure, but I know gold is. Now I'm a gold spot focused individual. Silver is more useful than any industrial metal, while gold is mostly a safe haven. Oh, it had similar breakouts today, but silver is a little delayed. Yeah, this you see the concepts here are quite universal. That's the way that we trade with TFX concepts. They're very universal concepts. You see, it even happens in silver quite nicely. Got a nice little silver buy situation here, filling up the range from here. Break, got a little SMA crossover too on that move. See this? Got that A cross at 50. Volume coming. Look at that entry confirmation. See how the volume comes in? It's the same psychology. See, when I trade, I'm always looking to see that psychology of like when you see silver on the daily and then you see gold on the daily and you see that similarity and you're wondering and looking more at candles like in terms of the human psychology, right? You see this? And that same process, you do it on the lower time frames too. As you're getting your entry confirmations, you're really trying to understand your entries. You really want to understand your entries. A lot of you people don't even know what a fair value gap really is. You probably just had ICT say it and a bunch of people on Instagram and you think like you know what it is, but you might not even know really what it is. Like, what does it mean? Like, you have to study it. You know, you have to really study the psychology behind that. And why is that something that's more market participants will be willing to look at? Like, why? Why? You know, ICT is a community on YouTube, right? I don't think they have the power to move markets. Correct? It's just a small community on YouTube. Just a small community. So the market is much bigger than YouTube. So you have to see and really truly understand, like, why would that hold any value? You know what I mean? So it can't just be something that you want. Because also I wanted to trade Fibonacci's and Fibonacci's made sense to me. But at the same time, it doesn't make as much sense to me as something as an accumulation and distribution. For example, like Fibonacci's are good because you're catching the retracement. But the problem with a Fibonacci is it can happen on the 5, 15, or 30 minute, right? You can have a 5-minute fib or you can have a 30-minute fib, but your 30-minute fib might have a 5-minute fib inside of it. So as it's coming down, it might not hit your golden zone because it's a higher time frame. It might hit the 5-minute fib instead, and then continue in that direction. And if the 5-minute fib fails, it could be coming down to the 30-minute fib. If 30-minute fib fails, it could be coming down to the 4-hour fib. So with the fib, there's a lot more loose parts. It's like, it's not a naturally aspirated engine. A Fibonacci is more of like a more complicated engine. There's a lot more moving parts. But you know, when we look at something like an accumulation break, it's only one accumulation break. Like usually at a given time and an area. Sometimes there's two, but it's even good if it lines up as two because you're gonna have a small one and a big one coinciding with each other. Usually happening at a close proximity to each other. But most of the time it's gonna be like one. So you kind of remove a lot of the moving parts. You can have a consolidation inside a consolidation, but this would take a lot longer to break than something like that would. So I think you gotta really dig into the way you look at markets, the concept behind it, if it holds weight universally and not just because a guy with 1 million subscribers says so. And then you're gonna find yourself a good foundation to build upon. Because the markets have existed before YouTube existed, right? So we want to be more in line with what actually makes the most sense, like support, resistance, supply and demand. Those still hold weight. They still test the what do you call it? Time. They stand up against time quite strongly. Support, resistance, supply, demand. I don't know much about FEG, but I don't trade them, but I would like to understand. Yeah, just more for the info. It's leaning more towards FEG is leaning more towards imbalances. And imbalances is also a concept which is sort of true in the market. Definitely, like when you look at positions and how markets do create imbalances, 100%. And I think that's the premise behind why people trade FEGs. Because I also used to trade imbalances as well, and they do hold some weight. Usually imbalance would be something like when the candlestick pushes down like this and then it kind of fakes out people and then it goes in the opposite direction. But since there's positions being sold here, banks, you know, we're talking about smart money now, banks would still be in drawdown, thereby creating an imbalance where candlestick could come and maybe just fill like a small part of it like here, or maybe a little bit of that candle, like 50% of the candle, fill the imbalance and then go back up in that direction. But you see, it already starts sounding like a rocket science. But I think that's what it is. The imbalance zones, FEG is an old concept. I think it's studied from 1983. Yeah, you gotta study it. Like, if it definitely is something that's beyond ICT, because for me, I'm not an ICT trader, so I just assume that he's the one who coined these things. FEG, and because he also says absurd things like he knows the algorithm of the market, or he says some pretty wild things, you know. And this is the same guy who was writing articles for babypips.com. Like, he was a teacher at babypips.com. So it's like, you know, like, you just got to think about it. You know, I think everybody just got to do their own thinking and then decide, like, you know, what makes sense. That's all that it is. That's why Bill Ackman says it's good to be optimistic. I say it's good to be cynical. Stay cynical. Don't stay optimistic. The problem with staying optimistic, you're never a warrior in a garden. Always a gardener in a war. You know, you're always optimistic. But when shit hits the fan, it's very difficult to remain optimistic. Unless you're purely delusional. You don't want to be delusional. But if you're cynical, you're careful. You know, you can still enjoy optimism, but at the same time, you're always thinking that you gotta be careful. I think it's like Robert Downey Jr. even says, when things are going well, just be humble. Right? Just be humble. And it also ties into cynical, because just be humble, because, you know, at any moment things could change. So that's why, like, when you take your trades and you start journaling your positions, Like, even when you're doing good, just be humble, because things could change and you need to be ready for that change. Well, whatever that adaptation might be, you need to be ready for it, because we don't know the clusters of good and bad trades, right? We can only trade our system, but as we're trading our system down the line, like, you're gonna have situation like this. I didn't know this was gonna happen in September when I was wrapping up August over here. I didn't know September was waiting for me like this, that I was gonna take 3 losses and just back-to-back losses like this. You know, so that's always around the corner somewhere. So when things are going good, just, you know, remain humble. You see, like, things are going good right here for me, so just gonna remain humble, because we know we're about to have another cluster eventually, which is also quite normal. And that's how you keep your head on straight. A lot of people, they're gonna be super optimistic, and when their funding challenges are not paying them out, then they're gonna start worrying and really being worried. All right, so we're getting a pullback, but still no entry. At least we're getting a pullback, and it did about middle of the range, close to 43.78. But you see, we caught up to the SMA, Ricardo. I think that's why you said 43.78. But you see, because the candlestick closed, the SMA pulled down, so we didn't really get to 43.78, but it still came close to the SMA, which was still part of the range that we filled over here. And we still got a bit more range to fill towards that next point, so 52 pips. But you see, it distributed so well for these players. Right over here, it's seeing some profit taking happening from this zone. This was a point A. Even if I didn't get my entry confirmation, so close to getting it, this was still an area of structure from since when the London session opened. So they distributed profit taking. Question is, how far deep is it gonna go? We don't know. But if it forms something here, we could see that as a support being formed, like something of the sort. Like, it will come up, create like a bit more structure here, and then keep going up to fill this range. That would be a good idea for a buy, because it would have created us like some kind of a foundation here. So that's gonna be the house that gets built. And if you can build like a strong foundation with price action, then we can see a little bit more sustained movement to the upside. And that's also how you're gonna avoid like fake outs, because if you start taking buys now, there's no like enough structure that's been formed. It'd be a bit risky. Did you see a trade yesterday that could have caught 100 RR? Can you imagine? Yeah, this was where was that? Here. Do this. 1 to 100. You know, it's the funny part is no one would actually hold that. It's good to see it happen, but you really gotta have some nice planning, you know. But I think I would have, if I knew what I knew now in year one, I would have attempted to hold something wild like this. Maybe 1 to 50. Maybe 1 to 50. 1 to 100 still feels like a bit of a stretch. Like 1 to 50. But it was such a smooth 1 to 100 though. Like literally just bled out. And it was just timed perfectly with the drops that were happening yesterday too. Because in the beginning, you're more your risk tolerance is a lot higher because you haven't had any like character development yet. So you're still like a kid in the candy shop. So you always want to hold these really low risk, high reward setups. But then it's only after when you start getting humbled that tolerance goes down a bit. Seeing like a little bit of a buy situation here. Oh man. Let's see if that actually stays looking clean. Oh wait, no, it's not even right there. Man, this is actually kind of messy. Be right back, chat. All right. Looks like it did a liquidity grab to the highs. So I'm waiting for price to see if it can re-break these highs over here. On the 5 minute it just did. Because now we avoided that whip. You see a necessary whip over here? It just took out some players. Actually, it's quite volatile, that is. There's a doji candle that just wiped both the lows and the highs. So it's kind of whiplashing a bit. Kind of looks random on the 5 minute, the entry. It's a break of this previous highs over there. Well, on the 1 minute, we can see the structure a bit better. It's up like 0.80%. Now it looks like it's going down again. We gotta wait. Now it's like it's accumulating here. So it's gonna, if it moves down, it's moving outside of the zone over here. So the volume is coming out of the zone. And it's got clean traffic as well. But you see got rejections at the same time. Look at those rejection wicks. Look at the pullbacks. Gotta wait and see. Right now it's like 50-50 for sure because it's still stuck here. So if it breaks, it's gonna come down. Breaks the highs, it's gonna move up. Why are you buying and why do I have buy limits? Oh, I don't know why you have buy limits. That's between you and yeah, that's just between you. Why you have buy limits? Why are you buying? Because price is moving up. Because if price moves up, I'm expecting we're going to continue to move up. We also got a little clean range over here on the 1 minute too. 5 minute, we still have a little bit of range on the 5. It would be much nicer. The best case scenario would be if this candle here pushes like this, closes here, and then the next candle breaks. Because if this candle here triggers in, right, it's a bit more risky because it can pull down as the new 5 minute opens up and then does something like this. So we have about 1 minute 50 seconds for this candle here to close. So really want to see at least a new 5 minute candlestick open up. You know, it's still play out. Like this candle here on that break broke about 33 pips from the open and still pushed up. So if you look at it from here, this perspective, that pushed up about like 51 pips from the open. So theoretically speaking, it could just do the same thing, even if it just breaks from here. That'll be just the same amount. Get triggered and then continue to push up. There's no reason to hold any trade or 1-to-1 to 1-to-100. What info you possibly have to justify such a hold, but could be cool to see. It just takes a bit of planning. That's all. That's the same with the FOMCs. You know, when we're getting rate cuts, for example, we know what happens with gold, right? We've seen it happen time and time again. We've seen it happen 2 times already this year. Those are 2 rate cuts, right? I remember 1 and 2. I remember 2 rate cuts. That we've seen those moves have incredible rallies. So that would only justify a 1-to-100, right? If you get stuck in like properly. Because this was the first one here when Powell came to confirm. Oh, and I think it was 26. No, it was 22nd of August. And then look at that bull run. Right? And then what was the second one? Second one was right here. Remember this? This was on the 10th of December. And look at this bull run that we had all the way up towards like 45, 51. So it'll just have to be timed with something of the sort. I think the reason why yesterday's played out so well is because even it says here that the fall came after the exchange operator at CME Group increased margin requirements, which required metal traders to put down more cash on their bets. So it had some profit taking, right, to fulfill some of those commitments. So just stuff like that, little hints like that could definitely help you capture something like this. But you need to know why fundamentally that something like this even happened in the first place to catch it. If it happens by luck, most likely that was just a technical trade which just required a few attempts. Right? Then it's all a matter of like how many attempts are you going to give it. Because sometimes people try these challenges during times when there's nothing happening macro fundamentally and they have to try like a lot of attempts. Whereas if you actually know how the market moves, then you just wait for those higher probability attempts that you can give yourself, you know? Instead of taking like 20 tries, you know, you can take maybe like 5 or 1 and time it properly. It's just a lot of waiting, you know? It's just a lot of waiting. But trust me, you're going to see this happen next year as well. So everything you experience this year with all those macro fundamentals, expect the same thing. Yeah, I've been trading now. I'm going to my 6th year. Expect the same thing next year. What we saw with rate cuts, what we saw with geopolitical tensions, just accept the same exact stuff to happen. Just same we saw volume happen during presidential elections, expect that same thing to happen next time we got presidential elections. That's the beauty of trading, is the more experienced, mature you are in it, the more money you actually start making when you realize how markets move based off those news events. Because for me, my aha moment, I always say, was COVID. When the first Pfizer vaccine was invented, I saw like the pound yen just skyrocket for a pretty long time. Just kept moving up because, you know, societies were opening up again, and I got this like notification. I think it was from like a Walter Bloomberg thingy on my top right hand side. I remember this very vividly on I was trading on my Mac at the time, and man, I saw that happen. I was in a sell, and then my sell got stop loss hit, and then price just kept moving up. Then I sat there and I really contemplated. You know, like how sometimes when you just sit on your desk and you contemplate, like I just sat there, I contemplated, like, man, I started thinking about like old people, like these mature traders. I'm like, these guys, they would have already known this would have happened, right? Pfizer vaccine, economy is opening, price moving up. Makes sense. Makes a lot of sense. Or like guys who made money during 9/11 as well. It's like, makes a lot of sense. Now I'm just thinking, if I had that level of maturity, what could I accomplish in the market? Right? It beats going to casino. That's for sure. There's a lot higher probability. I mean, like Bill Ackman says it himself. Don't worry about the price fluctuations in the short term. Think about the bigger picture. That was the bigger picture the market moves based off of. You see, even like when we got the rate decisions, it doesn't move like happen all at once. Like this is a rate cut, but it like gradually happens. Even on the first time, when Powell mentioned, it didn't go immediately up. The next day actually closed bearish doji, but it gradually got assimilated into the market over here. Because yeah, it takes time. You're not considering that M5 bearish FEG? No, sir. Remember what we said, the market's paradoxical. There's always a reason why you will not take a trade. Always. Because if you're going to learn too much, what happens? You're going to get analysis paralysis. Because now you know about the FEG, right? But you've come onto the stream and now you know about clean ranges, correct? Like we've already shown and proven to you that markets like to correct ranges, not only in the simulations, but also in live market environments such as these. You've seen this already happen. How many times do you need to see a range like this get filled like this? You've seen it happen down here. You've seen it happen right over there. Right now, the problem is you've learned this, and now at the same time, you've learned about an FEG, which is usually doing the counter of those filling of those ranges. So now you're confused. What should you do? Should you look at the FEG or should you look at the range getting filled? That's a paradoxical part about markets. The more you learn, the more money you're going to lose. It's not the more money that you're going to make. So you got to stick to a system, and through that system you build your consistency. So if this is hindering you, then don't take it. Don't take it. Don't take it. Because every trade has probability of winning and losing. Just got to stay consistent. Because if you're not consistent, you miss on these winning trades, and then your results are going to look like a bit all over the place if you're trading multiple systems. Could you share your opinion why CFDs over futures? Would you also consider a sell here? I think a sell would be valid below support. If you're looking for a sell below maybe like 43.67 support over there. Because price is just hovering right now. If you notice, like, there's no direction, right? I think we can all agree on this. There's no direction. Price is just chopping up. So we're waiting for that movement. That movement is either going to come like a bullish continuation like this, or it's going to come as a bearish pullback to the downside. But that distribution phase, we haven't yet seen it. It's no longer in this distribution phase. It's more in like a setting up phase. Issue is that the trade might be coming sooner here. I see a break right over here. Maybe I'll take this one if it pulls back down a little bit more. But there's a break that could be coming in by 43.70. That could be the first entry. Much like the trades that were taken on the buys this morning already. It's a similar situation. But if we were like pull down a bit more, then I think I'd have like felt a bit more confident on that buy. I was thinking exactly the same spot. Yeah, see, you might see volume start to come in. Told you. Alright, I just got triggered in here. Ah, man, that was such a strong volume push. Come on, Goldie. Follow through. And this was quite a what do you call, like a small imbalance push over there. I told you that volume was coming in right there. That was the first entry. That was the first entry right there. It's that psychology. Waiting for the 5-minute close. Yeah, new 5 minutes opening up here in about what was that? 10 seconds, 20 seconds. New hourly's opening up in about 5 minutes. Oh, we just got a new 5-minute open. Okay, like 5-minute lows. Fly Goldie. So got like nice clean range on the left hand side there to fill up. New hourly opening up here soon. Want to wrap up this trade before that hourly open. I'm going to break even right over here, chat. Mainly just because this thing is in play. It's in motion already from much earlier on. So you got players over here already in some pretty nice profits. They're already up about like 30 pips. It's going to be a bit cautious here. Stop loss to break even. Come on, flag, oldie. And your owlie is about to open up. You got a few minutes. That's higher time frame pullbacks. Got in like 2 minutes. Come on, you can do it. It's currently in a distribution phase, so we want to see it continue in this direction here. Oh, let's see, come on. I would be okay with taking in the drawdown if that spot we spoke about was not a confirmation of an entry. I would still be okay with taking in the drawdown because it could still pull back and retest that SMA right over there. But since we did already have a earlier entry model, just gonna be a bit cautious. As close mine, a made 7%. It's amazing. 100 on your $100 account. $100 account. I hope this doesn't make a big wick. That zone is a small reversal zone for you. Yeah, it's losing a little bit of steam over there. As the new hourly candle is about to open up. Also got that 8 SMA. Coming in a little bit as a kind of dynamic support. Here comes Auli. Auli's about to open up. Yeah, but that's gonna be the Auli that's taking me out. Yep, I got taken out break even. New Auli just opened up here. That's a problem. That's the problem right there. New Auli just opened up. Boom, boom, boom. Surviving that pullback was gonna be very difficult. I wish this one didn't play out though. I would still hold this. I would still feel good about holding this, but yeah, not at this point. Because it's gonna have to come and pull down. That was the idea. It's gonna have to. If it was gonna pull down, it's gonna pull down to retest some of these zones back over there too. That's my first trade of the day over here. Damn, that pesky Auli. I took a B also. That earlier entry would have been beautiful. And so it didn't play out like the other one did. The other one was the other one had an earlier entry, but it still played out. I'm always looking for like stress-free trades. See, that one like played out beautifully, even though it had that early entry like right here. Boom, boom. It still triggered this position, and look, it still moved up. Whereas this one, and that one also had like no hourly interference. You know, that one at the break was breaking around 14 minutes into the new hourly. This one literally broke here at that was about like 7 minutes before the new hourly opened. So it has a bit more of interference going on. But you see, it's like pretty much the same thing that happened here. Same thing that happened down over here. I guess it is just what it is, but it was nice to see it play out just the way we expected to, though. That's always the idea behind the way you trade. Is also to see that what do you call it? That a consistency. That's what you want to see. That consistency. Got a bit of a better entry, so I'm out at the top. All right, a moment like this, now I'm happy. You see, it came back to retest them. What's this? And we might distribute at the downside, but I hear you. I hear you with multiple systems, and the paralysis it causes. It causes paralysis because buyers and sellers make money. You know, like if you had your FVG, for example, here, you said there was order block on the 5-minute, right? You could have still made money. Because price went in that direction, but you see, these buyers still made money as well because price still moved in that direction. It's just about finding a balance. Because you also don't want to you don't want to get left like holding the bag as well. You don't want to have a profitable trade or become a losing trade because you're holding the bag. But buyers and sellers make money in the market. So no one's really right. You know what I mean? Would have been nice. Would have been nice to have that follow through again. I can't emphasize this enough, you know, whenever we do like simulations, I always say like these things are gonna happen, chat. Like that happen every day. That's what we had even the video that we spoke about yesterday as well. Like those situations are gonna happen daily, so you just have to be prepared for them. This is an annoying part because like I knew there was something cooking up here. It just wasn't looking as clean as I would have hoped it would have looked right here, because since the whole London session, since we got onto stream, there's only been 2 opportunities, and that was actually a difficult one. We actually caught the third one, right? Because there's one right here, wasn't fully formed. There was a second one right here, which already played out, and then we caught the third one because it was happening practically, like it was happening inside the bigger one, and then that one like played out for about like 30 pips. So basically caught the third one. Because the market doesn't know my playbook. The market doesn't know your playbook. It doesn't know anybody's playbook. We can just try and anticipate as much as we possibly can. But it doesn't necessarily know. Like if it wants to move, it's going to move. Correct? So you got to say, okay, you know, that made sense. That was a point of structure. And move from. It made sense. Point of structure. Close to what we want to see and move from. Then you can kind of like decipher and calculate how many moves have already happened. Yeah, difficult. Very difficult here. Out at BE. They also caught the top. had a lot of room to move as well, you see? Like, even though you want to be more safe and not hit this one and hit the one on top, it still has a lot more room. There's a lot more room to move towards like 43.76. That's whiplashing. You see what I mean? Now, if you made money on your FVG, awesome. Because you see, buyers and sellers always make money. But if you're greedy again, now you put yourself in a position. To potentially get stopped. Let me see, send a screenshot. Damn, Daniel. 1, 2, 3, 4, 5, 6. Got a nice little trend line break over here too. Started whiplash. It's also because it paid out people already from down here. It had a beautiful distribution, some pullbacks. Now it's just doing what we call it. It's gone to the washers. It's washing accounts now. The over optimistic traders, over traders. See, always good to be a warrior in a garden, because like warrior in a garden, we're already expecting this. Warrior in a garden, we're expecting certain situation like this, so we can manage trades a lot better. Tell me silver don't look like a three-headed head and shoulders, but on what time frame though? Oh, up here, 15, the 5 minute, I see it. Yes, a three-headed dragon. There's a right shoulder right here. Maybe silver can start pulling back down again. Nice little accumulation from that section. Price came down, kind of filled up some ranges over there. Pulled up, right shoulder, maybe comes down again. Well, you gonna buy? But it's overall you're still on the right side of the market. It's up 3.37% right now. If you see, since Asia open, price has just been moving up. This new high that was formed. It's just like broke into a sideways movement, which is accumulating orders. So maybe it can continue moving up. Silver peaked at what, $83. Goldie might also want to start moving up too, but it's gotten stuck in a. You see, the thing with gold, it has a lot of upside left for the rest of the day still, right? We still got like a lot of clean range to move up. It's 5 a.m. Eastern. Next volume time will be coming in about like an hour. So it could just be prepping for this bigger move. So you might see this move get filled like towards pre-New York, maybe NY. NY session, we're going to start breaking above 43.83 if we start moving upwards. But it's still within that same zone. You got support, you got resistance. Just a small fake out that happened below here. Back into the range. Waiting for it to continue continue moving up. Got some nice moves and done for the session. Oh, nice. Awesome. I still got some ammo in me here today. I think I'll look for one more trade later. One more trade. In the near term, precious metals could see more volatile price action with whipsaw moves likely to be driven by positioning and thin liquidity. Well, so far so good. Wow, man. Goldie's starting to come in again with the volume. Just give like a small kiss of death there on the 8. Beautiful touch. It's like a layup. You're playing basketball. It did that dirty trick though. That little pullback over here. Aggressive little pullback before the move up. It's actually happened, I think, wait, recently saw a chart like that. Maybe like something similar to this. Strong pullback. Or reduce SL? Yeah, this doesn't make sense here. Like, basically, you can let your SL hit. That's very little that you're saving. You have more potential for giving your trade more room than getting stopped out too soon over here. Something similar like that happened. Like broke above and then came down. And it's not moving up. I think I saw another one. Now you're running, Goldie.
Why are you running? Why are you running?
Yeah, now that's that range that's been filled. It's going for that. It's going for the second one here. So if there's like a running opportunity, this is actually a really good running opportunity for a trade like this, because you would have had like the first section right here, and then that would be the resistance. If you can get through that resistance, it can keep going to fill the next range. Right over here too, towards like 43.81. This is an hourly candlestick. An hourly pullback. Create a bit of volatility here. So yeah, hourly candle created its lows. Now it's reflipping. Starting to move in the direction. Because ideally, like the hourly, if you're in a buy, that it would just gotta have to make its hourly lows. It'll have to make its hourly lows. That's a higher time frame. Yeah, exactly. 1 hour candle earned it. Sometimes it works in your favor really good though, because it brings volume from the HTF. So sometimes it does actually like push. It can give you the push first up, right? Give you the first push up and then it will come down maybe later. Because you see most of these candles here, they all have top and bottom wicks. Like what is it? 85+% of candles gotta have a top and a bottom wick. This one didn't right over here. These ones all did. So sometimes the hourly could give us a push first. Now there's a pretty steep bottom wick that it formed too. It wasn't light. It pushed down from the candle open body like about 46 pips. Whereas sometimes it can create the bottom wick, but it'll make it like smaller than that. Let's say that's like 7.4 pips. This is a much bigger pullback. It's also distributing from this section right over here. So this range should also be filling. Order filled. 50 pips. 50 pips towards 43.81. 43.93 next CP. You gotta take it step by step because the first range, remember, was like this range. That smaller range here. This was 28 pips. Now the second range is gonna be about 50 pips. Now the next range above this area here, man, that's a really big one. You see this? You gotta go like all the way back over here, and that's like a lot further back. It's like a much higher time frame. So this is something I think like the New York session can possibly do. Like if the daily candlestick is most likely also gonna close bullish, that it's gonna try and fill some of this previous candle during NY. How do we distribute without manipulating? Well, you can kind of anticipate the manipulations. One way is just keeping an eye on the higher time frame opens. Yeah, but I think it's gonna be like very situational, like what's currently happening in the market. There's no escaping the skill. You have to learn how to actually trade. Gold already claimed ORH and is going up. Nice. Yeah, you see, like that's the thing. You know, buyers and sellers make money. Buyers and sellers make money. You see that the problem is like a lot of people, they're gonna have these trades like this, and they're not gonna secure anything. So you know, if you took a trade like that and you push down even like 50 pips, man, amazing. Problem comes when you're holding, you're overstaying your welcome. Because even catching that move, it's not even as easy because you see like even with the buyers right over here, it still had to come down first before moving up bullish. So the market does it in a way where it's like if you're going to have really big stops all the time, or if you're always going to be holding all the time, it moves in a way that can shake you out of positions. So the best way to do it is just to execute, always anticipate like stress-free trades, because that's what you want. You want trades which are going to be stress-free like this, which just keep going up like that, which don't give you much of a hard time, because you will catch those trades. Those trades will come. But in the meantime, you know, you're going to secure something, you got to manage your risk. Eventually those trades come. These ones like actually push quite nice, but then it eventually did come back to retest. See, it comes back to retest usually, and then continue creating those higher highs. Sometimes it also does that. It'll come back to make sure that it wipes off people, but at the same time also give people an opportunity to get back in. Those are two scenarios that it does this. Is it going to come to take you out break even, or it's coming back to retest this area to get more orders in so it can continue moving in that direction? Right? Because you got the initial buyers here. Maybe there's like short-term scalpers. Then it comes back, retests, continues to move up. This one was more of like not a retest, but more of like an hourly candlestick creating its lows before its highs. So very situational. It's a different condition here than different condition over here too. Here there was no hourly pullback. It didn't need an hourly pullback. So they're just very nuanced things like that which happen in the market, which can help you understand like really good trades. See, now it's filling up this next range right over here. So you see, that's why I said like if you trade FVGs, but understand them, because look, your FVG played out here, right? And it's still played out, but like at the end of the day, I like to go where the market is going. So for me, I don't like choosing like opposite direction. See, for me, my ranges get filled all the time, so that's my reality. I see these ranges always get filled. Maybe your reality, you see these rejections over here, and you know that's awesome. But for me, man, these ranges, I don't know how many times that you gotta see it, that you gotta understand, like when price moves, it moves. You see this range here was filled, eventually that smaller one, and now this next one that's getting filled over here. So I don't know, man. Like I just trade what I see. I don't know about a fair value gap because I don't really see, at least in my world, that those fair value gaps get respected quite a lot. Maybe for the short term like this, and eventually you do also get those runners, because yeah, eventually you will get a runner too. But for the most part, man, market moves. Like when it picks a direction, it's going in that direction. You know, you're not gonna stand in front of some bulls running at you. Yeah. But it's good because you see, I'm not saying that you're wrong. I'm also not saying that I'm wrong. We're both correct, right? It's just about how you approach it. How you're gonna approach that thing. Because you're correct. You're correct too. And that's why it's super important to be objective in the market. Yeah, still got about 21 more pips left. Another little shotgun play over here. Shotgun entry, close above 43.75 to move up. Pushed here like 33 pips. Distributed from this section. Here. Or like, where is it? Like right here? I think it was right here. I got back in buy after the BE 5-minute shotgun type entry. That was like small one that happened here, but there was not so much range left from here to here. It's about like 12.5 pips. Then you had the second one right here. There's looking back here at its buddies. Man, we ended up taking a lot of trades in December. I didn't even expect this. I'm not even sure how these trades, like we got like 36 trades in December. Because I feel like I haven't been trading in December, which is the weird part. I feel like I haven't been active. Well, we take like 36 trades. Because December is a long month. You guys saw today 36, 37, 30, 39. Probably get like 39, 40 before the month ends. Crazy. I mean, it's like if you compare to my last December I only took about 18 trades. Not a lot. But then in 2023, man, we went crazy in 2023. We took around also about like 31 trades. Dollar should fall. I haven't seen the dollar in a minute. See what the DXY is doing. Oh, DXY. We got that rejection zone here. Wait, where'd the analysis go? Yeah, we're looking at $100 psychological mark. And it looks like $100 are respected. It was showing a reversal confirmation play, this is. But you see, it didn't break with volume. It should have broken with volume here for price to move back into the range. But it's still been respecting this area. This is on the monthly time frame. You know, it's still respecting this area. I remember in the last video I made, I told you guys like wait 20 seconds if you find yourself getting caught in a lot of fake outs. Because something like this on the lower time frame, you trade the 1 minute, this could be as quick as just a few seconds. Just a few seconds like this. If you wait a bit longer, you avoid this. You can avoid this sometimes. If you're being very cautious. You gotta see with your strategy, because sometimes you can miss a move. But waiting usually does help. But in this situation, see, we've respected $100 psychological mark. It looks like dollar is still weakening. Doesn't look good for the dollar, but it looks good for gold. See, now gold is filling the range. That's gonna be the last range of this session, to be honest, chat. Like this is pretty much it. Like since we start opening up here, You know, the whole idea is a similar thing as what we're looking for the first trade that happened down here. Correct? Like what was happening on gold. You see that range has been filled. London session's officially done. Now we're heading towards pre-New York. Because those are the opportunities. Like since London Open was the first one here. And we got 2 happen right over here. And then now we just had like a little bit more to the upside. But yeah, this was like that consolidation reversal on the 1 minute that happened here. Break of key structure and then consolidate reverse. It's like break of key structure and then consolidate, but you see it didn't reverse, it didn't break the highs. It happens universally across all instruments. Damn, Daniel. Why are we running, Goldie?
Why are you running? Why are you running?
Why are you running? Finally retesting 4382. Yes, sir. That's it. That's the range been filled. And if it broke the lows, do you see? Also notice how it didn't break the lows. If it broke the lows, there would have been a higher probability. That's all that it would have been. A higher probability price would have come down to fill up this range. Down towards that next support by 43.57. See, that range is about 95 pips. If it broke the lows. But you see, it didn't break the lows. So I always look and see where the market wants to go. Not where I feel that it should go. Because if it's moving up, it's moving up. If it's moving down, it's moving down. Right? If it breaks these lows, there's a higher chance it moves down. But if it doesn't, it respects and breaks the highs, it will move up. Fly, Goldie. Coming back for you later. Remember, drink more water, chat. Do you think we can get to yesterday's New York high for gold? Man, like we're gonna have to move 1,000 pips. How many was like 2,000? That's 2,500 pips basically. From where we currently are, that's gonna be 1,700 pips. 1,700 pips. I mean, it's a long shot. It's a long look. Okay, so they say this whole thing here was due to margin requirements, right? So essentially, they should have some profits to put back into the market. So we should be seeing a price continue to move up bullish. But I don't know if we're going to see that same extent because, you know, it's much easier to sell than it is to buy. In the market, like sells, there are more sellers than buyers in the market. So I don't think so. We would just gradually move up there. But why would you even need to know that? You know, you don't need to know that to make money. Oh, wow, look at this. It's starting to fill this now next range on the left-hand side. The problem with like trading those FEGs is you also got to pick the direction, right? You have to choose a direction that's also in line with the market to give yourself a higher probability of having a running trade or good trades. But at the same time, a problem with that is you don't sometimes get triggered in. Because if you're looking for price to come down like this, for example, because there's so much momentum, you sometimes don't get triggered in. It's filling up this next range on the 30-minute over here. You see this? Clean. Oh, damn, what happened? Yeah, this clean candles. Now it's going to fill some of this range, but that's a pretty big range. Oh, wait, how do you do this? My indicators disappeared. Which button is it? I hate it when this happens. Indicators disappeared. They're on this. How'd you bring this thing up here again? It's It's right here. I see you. So far away, my knife catching zone. Let me bring this thing here. And it's now distributing. You know what it's distributing, chap? It's distributing the much larger one we spoke about in the beginning when we're looking for that reversal below the lows. That's why you're getting that same reaction. Right here as it's breaking 43.83. Damn. Why did I have to get the setup which had the hourly pullback? Literally all of them played out. Like all of these other ones played out over here. Boom, boom. The Suno one here. And even the much larger ones, I guess. Anywho, where is our new entry? Oh, new entry. I'm waiting over here. I take like one trade a session, so in the next few minutes as we're heading towards pre-New York, I'll see what the conditions are. And we are done here. Oh, nice. Oh, you got in like early. Experience a bit of drawdown. You gotta just wait for structure here and then have a stress-free trade. Cause that was scary, man. Like when price was moving down like this, it was moving down with so much volume to the downside. Like today could have just been like a day where we see even more profit taking. Price could have just kept coming down. Or you could have like waited, but anyway, you know, like you could have waited and then create structure and then have that structure be your foundation for price to move in that direction. But nice, you know, still a W trade over here. Also this, send an after picture. Let's see how you manage this trade. The managing part's always difficult. Sometimes you get in, but like how do you stay in the trade? Let's see, you gotta secure something, man. You gotta secure something. That pushed down like about 50 pips. Did you secure anything? Because that's gonna be, I guess, the lesson for the day, you know? Because this used to happen to me a lot. I would get like a trade like this with a Fibonacci. It would go into profit. And then it would start to go against me. Like, damn, man. Could have secured some. Next bias. Got the free indicators in the description box if you want to get the TFX bias, the daily bias indicator, or if you want to get the SMAs. You can get it in the description box or come over here on Discord and we got it here, bias indicator, SMAs. Yeah, we're up 1.33%. Traders scramble to buy the dip. Gold wipes out $240 in bruising sell-off as traders scramble to buy the dip. Dip buyers step in. Buyers rush back in early Tuesday, lifting prices towards 43.60. Quick rebound suggests long-term conviction hasn't cracked, despite short-term positionings getting flushed. This is what late cycle price discovery looks like. Sharp drops, sharper reflex bounces. Yes. Definitely more bullish overall. Gold remains up roughly 66% in 2025, driven by Fed rate cut bets, geopolitical risks, central bank demand, and ETF inflows. With at least 2 rate cuts pricing for next year, gold's opportunity cost is low, non-yield, but no penalty either. Silver echoed the chaos, swinging wildly after a 9% dump. Apparently momentum markets don't do gentle corrections. That's true. I mean, correction with sellers? Man, sellers are the worst type of corrections, man, because they're gonna move so fast. At least buying correction, you know, buying correction is gradual most of the time. See, like even right here, super gradual. Is there any way that gold just dumps now? I would say just wait for watch yesterday's video on counter trend trades. That's what you gotta do. Go on my channel and watch that video. One thing I found out, my strategy is very good at finding an optimal TP most of the time. I'm getting out of very nice places where price actually goes against me almost instantly. Very nice. And how do you find it? You know, because sometimes it's going to be like 30 pips. Usually I think with mine it's like 30 pips. Somewhere around like 30. But it could hit from 16. And now 20, but between these three, 16, 20, 30. But most of that time, like 30 is the upper limit. But obviously it can push a lot more than that, but if you want to be on the safe side, like this position here, the earlier position did about 30. That's the one that we were cautious about. Did 30. So you're going to see profit taking. So it's already towards the tail end. This one just skyrocketed. This one also skyrocketed a bit more, about like 55. Hey, Daniel, thank you for the sub. Yesterday's move could be a liquidity grab to move back up today, breaking yesterday's highs. Well, that would be a surprise. People want to catch bomber clots. 1 to 100 risk reward. I think yesterday was like yeah, it was like a special condition that we had yesterday. See current trade. Oh, nice. Oh, you're still planning on scaling this in? What is this? SL trailing position. Gold 1 minute, 30 minute, 15. Beautiful, man. Up right now about $300. Hey, you could actually catch a really nice runner. Put your stop loss to break even, secure a couple of positions and let one run. Even the 0.0, the 2 cent lot. Oh no, 0.02. Very nice. You might get that bullish action today because like it still has a lot of upside to it. But definitely secure something, you know? Good retracing so fast from that breakout. Yeah, it peaked about 70, 80 and then starting to pull back here again. It's gonna gradually do it. I don't think it's not gonna, I doubt it's gonna like replicate this exactly the same way they came down, that it's gonna go up. And that's a good thing because, you know, it has to leave a little action for us, like for the rest of the week. We want to see Wednesday, Thursday, Friday over here as that being an opportunity or magnet for price on the HDF. This is a daily time frame play. Daily time frame, maybe even the 4 hour. You go on the 4 hour for price to keep trickling up. So this is really good. This means we have price action to look forward to. So it would suck if it did it all in one go. You know, unfortunately, gold has been doing a lot of that of late. Either during early Asia session, it just does all the volume in one go, or like later on during the day, all in one go. I think I'm gonna head out here, everybody. I will see you all tomorrow. Let's get this. Take care, take care. Adios.
No time for this slip, homie. Now we bout to dip.